This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, February 17th, 2015. Euro dollar. So with the euro right now, the focus is on the recent consolidation that we've been seeing between 12.65 below and 15.34 above. A break above 15.34 would extend the current correction towards the 17.50 area, while back below 12.65 would expose the 10.98 recent 11-year low, which guards against the psychological barrier at 110 further down. Ultimately, the downtrend remains firmly intact here, and only back above the 50-day moving average would compromise the immediate bearish outlook. Sterling dollar. So cable is continuing to extend its correction after breaking out above 52.70, and there is scope for additional upside towards the 54.85 area, 54.85 to 55.90 area before the market considers a bearish resumption. However, we should pay attention to Monday's bearish outside day formation, and if the market stalls out by Monday's high and breaks back below or closes back below the Monday low at 53.39, this could open the door for a more immediate bearish resumption towards the 2015 base at 49.51. Dollar yen. Dollar yen had recently broken out of triangle resistance to suggest that we could see a more immediate retest of the December 7-year peak at 121.85. But we have since seen a retracement back into mid-range, and until we break above 21.85 or below 15.55, the outlook continues to be quite neutral. On a medium-term and longer-term basis, of course, the uptrend remains firmly intact, but again, we will need to see a break of the 121.85 7-year peak to signal a bullish resumption and extension towards the 125 area. Euro Swiss. So Euro Swiss is also confined to a consolidation over the past several sessions, with the market now trading between 106.50 and 104.15. A break above 106.50 would expose a move towards the 110 area further up, while back below 104.15 would take the newly adopted constructive outlook, would negate the newly adopted constructive outlook, and put the pressure back on the downside. Aussie dollar. So Aussie dollar remains locked within a bearish trend, but has been consolidating off recent multi-year lows at 76.25. A break above 78.76 would suggest that the market could be poised for a more significant correction up above 80, while back below 76.25 would suggest that the market is poised for a more immediate bearish resumption and move down towards the 73.75 area. Dollar CAD. Dollar CAD remains locked with an intense bullish uptrend, with the market recently trading up to fresh multi-year highs at 128, but has since deferred to a period of consolidation in search of the next medium-term higher low ahead of a bullish resumption up towards the 2009 peak at 130.65. Consider the possibility for setbacks below recent lows that we had seen at 123.50 to extend towards the 120 area before the market ultimately heads higher. But while the market does hold above 120 on a weekly close basis, the bullish outlook remains firmly intact, and only back below that level on a weekly close basis would negate the current outlook. Kiwi dollar. So Kiwi has broken up above some recent consolidation, taking out 75 and looking for potentially considering the more significant upside correction towards the 78 area ahead of a bearish resumption. Ultimately, the downtrend remains firmly intact despite the recent move, and only back above 80 would compromise. A lower top and break back below 71.76 would open the door for a move below 70 and towards the 68 area. SPX 500. The S&P 500 has recently rallied up to another fresh record high, trading still just shy of 2100 ahead of the latest minor pullback. But there are signs of exhaustion at current levels, and only a weekly close above 2100 would open the door for the possibility of meaningful gains beyond current levels. However, a break and close back below the low from the 12th of February at 2062 would suggest that this topping structure is firmly intact and open the door for an acceleration of declines back towards key support at 1968. Gold. Gold has since found some support ahead of 1200 in the 1217 area, and with the market breaking out above 1256 several weeks back, there is the possibility that this market is carving a more significant medium-term base and a higher low here ahead of a resumption of gains back towards recent highs that we had seen at 1308 and towards the 1345 July peak further up. That's all for now.